As day traders, we have to look for ways to invest our profits outside of our trading accounts. Because if you've been trading as long as I have, then you would probably know that money could be made just as fast as it could be lost. That's why it's very critical for you to diversify where you're putting your cash and make that money work for you, whether it be in Lamborghinis, private jets, or Pokemon cards. Just kidding, I have none of those things. In this video, I'll be sharing where I personally invest my day trading income over the years through 5 major investment areas. The goal of this video is just to bring some light to you and many traders out there to start thinking about investing for your future goals or retirement. Because if you want to become a full-time day trader, then you cannot expect any employer benefits or contributions. Your retirement is entirely in your own hands. Before we start, just a reminder that I am not a financial advisor. I'm just some guy on YouTube. Wait, I'm not even some guy on YouTube. I'm not saying how I'm investing is the right way or the only way, but these are just some of the investments that's been giving me steady, stress-free, and lucrative returns over the last 7 years outside of my personal trading accounts. So if you appreciate these fun and educational videos, all I ask is that you hit the thumbs up at the bottom of the video and subscribe if you want to see more in the future. Since I'm a full-time day trader in the US stock market, of course, it would only make sense for me to keep some of my long-term investments in stocks as well. Keep in mind that I'm talking about my investments, not my day trading account here. It's very important that you keep them separate. That starts by talking about the individual stocks I hold. When it comes to investing long-term, especially in individual companies, I like to invest in what I personally use and what I understand. I hold most of my individual stocks in my Questrade investment accounts. The only 2 individual stocks that have some significant amount of capital in are Tesla and Apple stocks. The reason I like Apple is because, well, it's Apple. It's reliable. I've been using the product since back in college, and they are still growing their suite of products every single year. I've been hearing all sorts of reports and analyst comments saying that Apple is dead and they're not innovating anymore since I started trading over 7 years ago. And all these years later, the stocks just kept on steadily going higher and higher. Now, when it comes to my investment in Tesla stock, this is going to be an interesting story. I first started buying Tesla stock around the same time I posted my first ever YouTube video on this channel at the end of 2018. I spent the time and I did my own research and I shared it all in the video, why I wouldn't bet against Tesla stock in 2019. At the time I started purchasing, the stock was trading around $300 pre-split at the end of 2018. I bought the stock in my TSLA account and it just kept on tanking and tanking. On the current split-adjusted price, that's equivalent to my holdings selling off from $75 all the way down to $35. And yes, that's more than 50% decline in my investment in Tesla stock. I remember seeing comments on that YouTube video, people saying that I must have gotten killed or gone bankrupt investing in Tesla, and that's why I'm making videos on YouTube. Well, little do they know, I have a very hands-off approach when it comes to my long-term investments. I pretty much just buy and forget about it. This is true for all of my other investments that I'm going to talk about later on. I only check my investments at most once a month and sometimes every quarter. I don't check every single tick on every single stock like I do in day trading. As you can see on this chart, Tesla stock started rallying near the end of 2019, 1 year after I first bought in, and went on to new highs in early 2020, and especially after the 5-for-1 split, the rest was history. Despite the sell-off with the rest of the markets during pandemic, and despite all the bearish reports saying how Tesla is overvalued, Elon Musk had never disappointed me. Now somebody just needs to take Twitter away from him. Seriously. I was a millionaire until Elon tweeted. So Tesla and Apple stocks are the only two individual stocks that I regularly buy on the dips. There are many investors out there who are scared to ruin their average. Not me. If I believe in the companies and the future outlook, I don't mind buying high and buy even higher on the way to the moon. My most recent buys on these two stocks were during the middle of 2021. I have a few other individual stock holdings as well, as you can see here, but all of these are a lot smaller positions than Apple and Tesla stock. I have Disney, Raytheon Technologies, Corsair, Bumble, and a few dividend stocks like SPG, Simon Properties, APTS, and NHI. SPG and the rest of the REITs, APTS and NHI, give me exposure to the real estate sector in the US. I started buying them slowly in the middle of the pandemic when the prices got destroyed and they were all down more than 50% from the highs. I saw this dip as a good way for me to start allocating a small amount of my money into stocks that pay dividends. They have since then all recovered to new highs, all except for NHI, and that's also my biggest loser in this portfolio. Speaking of dividends, they are not my primary focus right now, since I'm still young and I have 30 or 40 more years to let my investment grow. I prefer to invest in high growth potential stocks and ETFs that I will mention later on. But I do dabble in some Canadian dividend ETFs, and I actually prefer these over the American dividend stocks, just because as a Canadian, it's more tax efficient for me to earn dividends from Canadian companies. So the dividend ETFs I like the most are XDI and XDV from iShares. They give me good exposure in the Canadian energy stocks as well as the banks, which are very well regulated in Canada compared to the US. Both of these provide me with some good dividend yields as well. Again, dividends are not my primary focus, but it's really nice to have all the payouts monthly or quarterly reinvested back into buying more shares. That's why I get the compound interest, the eighth wonder of the world, year over year. Now let's move on along to the broad market index funds, which I have more capital invested in than individual stocks on Questrade. And I invest in these ETFs every 2 weeks on Wealthsimple Investing. Wealthsimple Investing is a robo-advisor, and I really just use it for the convenience to automatically contribute regularly to all of these ETFs. I have my portfolio risk set to high, which is suitable for my own personal time horizon and investment goals. You should always evaluate your own personal needs and situation before picking your risk tolerance. Personally, I'm aiming for growth over the next 20, 30, 40 years. I'm not scared of market volatility. You can see the majority of my ETF holdings I'm invested in are in broad market equities in US, Canada, and international. My top 3 ETF holdings are VTI, IEFA, and EEMV. VTI is the Vanguard Total Stock Market ETF. The expense ratio is only 0.03%, and this fund tracks the performance of US equities in the large caps, mid caps, and small caps. At the filming of this video, the market is near all-time highs, so this fund has done extremely well since the drop we had in March of 2020. The next major ETF holding I have is IEFA. This is a fund by iShares that invests in large, mid, and small cap stocks in Europe, Australia, and the Far East, essentially providing diversification in the international market outside of the US. Then we have EEMV. This is another ETF by iShares that invests in the emerging markets ETFs, such as from China, Brazil, Russia, and India. I would say personally, out of all the ETFs that Wealthsimple offers on the platform, this one is probably the most questionable. The expense ratio is really high at 0.25%, and the returns have been very minimal at only 4%. I think this is probably due to the recent performance in the Chinese markets. The other funds I have are XIC and VUS. XIC allows me to invest in Canadian equities market, again mostly concentrated in finance and energy. VUS is just another Vanguard US total stock market ETF, but it's Canadian dollars hedged. You can look up these ETFs in detail if you want, but they're nothing fancy, just all broad market ETFs. Again, the reason I'm using Wealthsimple robo-investing is that I want to do what's easiest, hands-off, and time-saving for me, so I don't have to lift a finger to invest regularly and have diversification outside of the US markets. I'm already busy day trading every single day on the individual stocks, so I don't want to do the same for investing. I don't bother picking out individual stocks or hidden gems in the stock market that people are always looking to do on YouTube every single month. The next investment asset class is where I have the most capital invested in long term, just a bit more than the stock market, and that is real estate. I live in Vancouver, yes, one of the most expensive cities in North America and definitely in Canada. I bought my first primary residence many years ago in 2016. At the time, I was living at home with my mom and I had a decent amount of savings from day trading and of course from my former career. I'll be honest here, at the time my mom basically saw that I was spending a lot of disposable income partying and going to music festivals and I'm not paying her rent. So one day she basically told me, "Okay, Shay, it's time to grow up and get your ass off the couch and stop eating." So yeah, I guess she was right. I was kind of stupid with money back then. Yes, I had to grow up and get off the couch, but I didn't stop eating though. And once again, my mom was right. Unknowingly to me at the time, purchasing my first property was the best financial advice she could have given me. Not only did it allow me to get my foot through the door into the Vancouver real estate in 2016, it also forced me to start budgeting and tracking for all of my expenses. Basically, it forced me to grow the up. Before this, sure, making money from trading was great, but I had no idea where the money went with all my spendings. I didn't know how to invest and spend in the most tax-efficient ways, and most of my cash was just sitting there collecting dust under my couch. Now, I'm still very bullish on the real estate market in Greater Vancouver overall. This is my way of capturing both the capital appreciation and monthly income from rentals. Overall, my real estate investment since 2016 had yielded me more than 3x returns, and I have no plans on selling anytime soon. What I love about real estate is the leverage. In Canada, you have to put 20% down payment on all the standard traditional loans, but you get to borrow the 80% from the banks. All of my loans are fixed rate at sub 2%, so I still get to sleep really well at night. I will continue looking for more real estate investment opportunities in Greater Vancouver, as long as the interest rates stay really low. Finally, we are now at my crypto investments. Yes, I saved the most speculative and volatile investment for last. Compared to all the previous asset classes I just talked about, this is definitely the area I understood the least about. Therefore, it makes sense for my own risk tolerance to only allocate a small amount of my capital here. Essentially, I'm only investing in what I'm comfortable with losing 100%. The only cryptocurrencies I own are Bitcoin and Ethereum, essentially the two big dogs in the space. I only started investing in them in February or March of this year, and at the time, Bitcoin was trading near all-time highs, around 60,000. So instead of throwing all of my intended capital into Bitcoin or Ethereum all at once, I just dollar cost averaged in. So I regularly bought some every 2 weeks into both of these cryptos, regardless of whether Bitcoin is at $50,000, $40,000, or $30,000. I buy all of my cryptos on Netcoins, and I hold them in BlockFi and a cold wallet under my couch. Again, I'm only investing in what I'm comfortable losing, which is a lot less than my stock market portfolio and real estate. So I already calculated my risk. Please make sure you do so for yourself for any investment assets. Hopefully by this point, you can see some patterns in my long-term investment strategies. I invest in what I know and personally use regularly, and I choose vehicles that are convenient, time-saving, and stress-free. Please don't just go out there and buy whatever I just talked about today. Make sure you do your own due diligence and assess your own income and tax brackets. The goal of this video is just to bring some awareness for you and other traders out there. Remember to use your short-term profits from trading to build long-term investments for your own future retirement. If you enjoyed the video, please remember to hit the like button and subscribe. If you're interested in learning how to day trade in a step-by-step manner, feel free to check out the Humble Trader Academy on my website. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next time. Thank you guys so much for watching. If you want to learn more day trading content, make sure to subscribe and check out my website at humbletrader.com.